What's going on, operators? Episode 77. We have Isaac here. You know him from Mini Katana. You know him from Campai Foods. I was the first investor. He's here telling us about going from short form video, selling D2C swords online, to making delicious candy that you can buy in Target. He's a good friend of mine. You know, we don't see eye to eye all the time, but he's got a really great story. He's tenacious. He's a builder. And then at the very end of the podcast, you got 10 or 15 minutes talking about the macro environment. So Jason, Big Daddy Ecom Grandpa, brings some cool information to us. So we're just going to go over it. That's basically it, guys. Thanks for being here. Operators Podcast. Talk to you later. Goodbye. One of the most challenging things about running an e-commerce business at scale, when you're doing thousands of transactions a day across multiple different sales channels, is the operational complexity that scales with it. You have to do refunds on eBay, and you have to do customer service tickets on Amazon, and everything just kind of gets out of hand. You get reports from Shopify and Amazon, and all of them have weird, unique parameters that don't match the way you look at things, and you're manipulating data. And you just want one source of truth that has gross revenue, discounts, COGS, margin. You just want one thing that has all of it. And that's where Fulfill comes out of the box with the best reporting in the business. It provides accurate, reliable data systems. It does order management for you. And it does all that without needing, customization. They've worked with e-commerce businesses like mine at Ridge, like Hexclad, and they've built the most accurate, up-to-date reporting that comes right out of the box. It has real-time insights. You can make better decisions. And you know when you sell something, what you sold it for, what the COGS were. And if you have to do returns or refunds, you know all of that in one spot, in one out-of-the-box report. So thank you so much, Phil, for being the flagship sponsor of this pod. If you order something from me, it will be sent through Fulfill's data pipelines to my 3PL. If you do it from Amazon, that comes into the Fulfill reporting as well. So thank you, Fulfill. You're the best. So Jason, you won a senior citizens golf tournament? That's pretty cool, man. Tell us all about it. Was it the local YMCA?
Actually was it was a very big member guest tournament at my club in Carmel. There were 54 teams, and my team won our flight. And we had the fourth highest overall score. Overall, we placed fourth overall, but we won our flight. That's what matters.
The average age was 100.
There it is. I knew the average age question was coming.
Yeah, I was going to say, is the average age like 100 of the golf club?
Well, I mean, golf does have a little bit of an older demographic, but there were plenty of people younger than me in the tournament. Yes.
Cool, man.
Do you get a trophy for that?
I won. Let's see, my partner and I split about $1,200. Not bad.
Almost enough to buy some Hexclad right there.
We'll take it. I'll buy a new 12-piece set.
That's a third of a pallet. That's like a third of a pallet of candy right there. If you're interested.
I want to talk about candy. I want to know what is going on. The swordsman who sells candy.
Yes. Isn't that a weird thing that being a business owner does to you, though? You start thinking about weird conversions of what you can turn money into. It's like not normal person stuff at all. You converted it to pallets of candy. I think there are 6 people in the world that would do that calculation in their head.
It's true.
All right, guys. Today we're here with Isaac. He's made waves for 4 years at this point in the e-com community. He started selling swords. He got really big pushing organic short form video. He couldn't run ads. He still can't run ads selling swords on Facebook. So he was showing us this other path, this new way, this organic video push. He was very, very, very early on it, and he had a lot of success. He decided to leave the world of swords. He still runs it. He still has that business up and running, but he launched something better, something tastier. He's also a candy salesman. I was an investor in that business. I'm still an investor in that business. We're going to hear all about that. So Isaac, thank you for coming here on very, very short notice. You see, Matt's not here. We barely have Mike here, and that's because we're bad at planning. So we have Isaac. He showed up on 30 minutes notice. Isaac, thank you for being here.
Thanks for having me. Where is Mike? Where are you?
I'm in Park City, baby. These are the mountains behind me. I'm trying to live the Jason Panzer life.
That's a poor substitute for Carmel Valley. I was just thinking that. I was thinking that actually it's wannabe.
Yeah, and but Mike's like, check it out, a mountain. First time he's seen one all
Have you guys seen
decade.
this? Apparently, some places it's not just flat. Look, I can prove it right there. Never seen it before. No tornadoes here. Can you believe that?
Dude, it's just like a kind of a hill behind him. It's not like a majestic crescent at all. He's just like, check it out, dude. I got a hill.
I love how Sean thinks Oklahoma is basically some like third world country. You know that like we just got electricity. It's great.
No, that's not true, man. I've been to third world countries, and I'll never go to Oklahoma. So
Yeah, but Sean went to Austin, and that wasn't good enough for him. He moved back to LA, so that's who you're dealing with, Mike.
yeah, too bougie. And then Matt is in Italy with his family, and it's midnight there, and he wouldn't wake up his kids to call into a podcast. Can you believe it? But all right, Isaac, let's just hear from you. People want to hear the journey. I've seen the journey up close. I think I met you when you were doing probably $2 to $4 million a year at ECF. You just got back from ECF Live, I believe. So just tell us the full story, and we'll interject with questions, and we'll get to what you're doing now.
Yeah. This starts in early 2021. Me and my infinite wisdom. I kept doing weird like side hustles, right? Like I had a social app that failed, and then I was like, what can I do that requires no money? And I kept coming back to ecom because at that time, like you could just like put in $5,000 and turn on Facebook ads and still make it work, even in 2021. And that's kind of what happened to me. I started a letter opener business called Mini Katana. Um, and we ran Facebook ads with that business. Why I started a Japanese letter opener business, I'm not sure. Like I think I just have a giant affinity for Japanese stuff. And I love opening mail. Like I always got excited about it. It's like a childhood thing. Um, and it worked. Like we were making money on Meta, right? And for the first time, like I felt like I had a business that seemed easy to scale. So I maxed out my credit cards buying more inventory. I went to my friends and I was like, hey, can I have a few grand to buy more inventory? And then I filled up my apartment with these like little letter openers. And then that's right when Meta banned us uh, because we are selling weapons. Um, and if Meta bans you in your small account, there's nothing you can do against that. Um, so here I was, maxed credit cards, not very wealthy, trying to figure out what do I do if my apartment filled with letter openers. And my instinct was, let's just try every single advertising channel I can think of. Snapchat, Pinterest, Google Ads, everything. And like it didn't really work. Like Snapchat kind of broke even. But what ended up working is I made a TikTok video. And I had been a user of this app before. And it wasn't even like I had a thought of like, hey, maybe this video will sell a letter opener. It was more of I'm gonna make this video so I can use the in-app editor on TikTok. So then I can download the video and make an ad for Snapchat with it. And that first video actually sold a single letter opener. And it wasn't like it got 10,000 views. Somebody actually went out of their way to look up the website to buy this thing. Like it wasn't linked to anything. After that, I just went crazy on that channel. Like I smelled blood in the water. If I could get one sale on 10,000 views, I could get millions of dollars on millions of views, right? And the third video sold out all of our stock. And everything I do today is like just an extreme version of that. For first few videos.
Okay, I got to jump in because you started in 2021. That was not that long ago. We are in Q4 2024 at this point. So 3 years ago. This guy started in e-commerce in the past 3 years, and he already has a diamond play button. So show that off so people can check that out. Operators podcast on the way. How heavy is
Tell
that
what
thing?
that is, Isaac. Most people don't know what the diamond play button is. How do you get that?
It reads the back. Congratulations on passing 10 million subscribers. YouTube. I don't know if you can read that with all the fingerprints, but it's actually really heavy. It's like 10 pounds.
Yeah, and then behind him you see at least a silver one, a couple gold ones as well.
What ended up happening is after like the first year was TikTok. That was the year of TikTok. But I knew like three things. I knew every serious creator was a YouTube creator. And that's basically what I was. At the time I was making all these videos by myself in my tiny apartment. And I knew like I had to hire other creators because I wasn't actually that good at it, and I didn't like doing it myself. I'm more of a product person. Um, so year 2 was the year of YouTube, but like that's what I'm known for now. Um, but we basically May launched on YouTube, and we had a lot of short form content stockpiled. And the timing was perfect for me because YouTube had a very large deficit of short form content that was good. So I just started posting like 4 or 5 videos a day. Um, and then 2 years later, we have like 15 million subscribers. So my timing was like perfect. Um, and we like scaled to like a billion views a month over time as well. But like the business had a huge glaring problem, and this was actually when I met Sean. I remember him telling me that it was stupid that I sold swords. Like that was one of the first conversations we had. So Sean saw it. I think other people that have more experience saw it, but I didn't see it. Right? I was like, as long as we can keep increasing views, we can keep increasing sales. But what ended up happening is 22, 23, like those were I didn't grow much. Like the first year I grew, did 2 million. The second year I did 8. The third year I did like 9. And then the business just like wouldn't budge month over month. And what was happening is we had captured the entire TAM of the niche. Like in 2 short years, we became the largest sword seller in the world, which isn't that like that's not a huge market, right? Like there's one other company that does $3 million. Um, and I kept thinking to myself, I was very frustrated. That was my first reaction. I was like, God, I have a great marketing playbook. What is going on? But eventually I kind of just came to a conclusion like I gotta roll out other products. I gotta try to expand out of this niche, right? Um, and I kept looking at different niches, but I was looking for something that could potentially be like a disruptive niche that could get into the 9 figures. And that's kind of why I ended up in candy. I actually do freeze dried candy, which if you look really close is a new category within like confectionery, right? Like if you think of all the legendary candy brands, they all started with some great innovation. Like even Hershey's, everyone's like, oh, Hershey's has been around forever. I'm like, the chocolate bar, which made them really, really big, was an innovation during World War II where soldiers needed to carry around chocolate more easily. So they created a new form factor. Um, I don't know if anyone, for those of people in the audience who've had freeze dried candy, it tastes completely different and changes like the texture and flavor profile of the final product. But it also happens to be a extreme content marketing fit with like the YouTube audience because it is candy. If you ever wonder why so many YouTubers launch candy brands, that's why, because every kid watches YouTube. Um, and it's also like retail driven. And I think I saw the macro last year where I was like e-commerce was getting continuously harder, and I wanted to meet the consumer where they were, and I kept meeting entrepreneurs who were crushing retail, right? Because retail is coming back in a big way. Um, so that's why I ended up going into candy. We launched in January of this year, and it's been like more successful than I could ever imagine. I didn't know we'd end up in 6,000 retailers this fast and with a Target launch. Um, but I'm just extremely grateful for being here. And I think what I really nailed was the like being in the right blue ocean, really.
You have a better market, right? You have a better TAM. You have what appears to be a pretty good product. But how much of the success, the initial success of the product is coming from the fact that you're an awesome YouTube marketer or YouTube creator?
I think about that, and I actually think like 10%. Like it's actually, I know this is a weird statement because we do get a lot of views on YouTube and the brand is on YouTube and viral, but I think the packaging and product are compelling enough to where like it kind of sells itself. Like all we have to do is get somebody to taste it once. Like get a kid to taste it once and they're gonna want to rebuy it. Um and I think that's really what I did right in this instance. Like I saw an opportunity that was innovative and I went into that blue ocean. So now like the skies are clear and I can just grow, right? I'm not competing for market share with other people because the category is just growing.
How long were you working on the candy before you went to market?
About 8 months to a year. I bought like a freeze dryer like February of last year. and I spent 8 months before I got into a commercial kitchen.
It's awesome.
Yeah. So Jason brought up, is your short form video prowess helping this candy business right now? Uh, I think the most unique thing about your pivot is that the sword sales, you'll probably do 8 figures, very low 8 figures in sword sales this year, right? The business is still alive. It's still well. If you need a katana, go to minikatana.com. You can use our promo code operator. So it'll get you 10% off whatever katana you want. I've bought a lot of them from a lot of my friends.
I
But you
have a
could
sick one in the office. It's around the corner. I don't have it in my office, but we have a sick one here. I actually think I caught myself on it once.
Yeah. So that business is still up in life. It's 8 figures, $10 million, all direct to consumer. The candy business, can you even buy it on the internet, or is it just all retail focused?
It's all retail. Like it's 100% retail.
What was that learning curve like? What was the biggest fuck up, the biggest mistake, the biggest like, oh man, I wish I had experience with that?
Yeah, I want to backtrack here. We actually launched on TikTok Shop first. Like I know we're 100% retail now, but October last year when we got a commercial kitchen and we had a launch one and it was TikTok Shop with a different brand that looked different. Like it was less, I'll say less good. And like we scaled to a few hundred a day very like within a few days. That's how I knew like there was an extreme PMF there. It felt like mini Katana, like where you just posted a video and you got a sale. But I remember like I started talking to other candy business owners that were early in TikTok Shop, and the GMV was like depressing. It was like a few $100,000 a month for the entire category, right? And I talked to CPG founders that were doing retail, and they're like, "Oh, the GMV is like tens of billions, right, a year." So my first move was actually I'm going to shut down TikTok Shop and redesign. We're going to redesign the brand for retail here, right? And that's like when the official launch came in January. It was within our first retailer box launch. And there's like 3 things that make retail that made it really difficult for me. The first thing was the cash conversion cycle, which you hear retail focused founders talk about all the time. Hey, it sucks. Like it's just a cash sink. You have to raise money. Yeah, I was very naive on that. We manufacture candy, so like it's net 60 or net 90 or whatever the retailer has in terms. And then we also have to make stuff, so we prepay labor and prepay like most of our raw goods. So it takes like 4 to 6 months to cash convert on this business. Whereas the sword business was like we had net terms with manufacturers, our partners, and we also pre-sold a lot of inventory, and we still do. So that business like has a a very large negative cash conversion cycle, which makes it easy to scale. That was the first thing. When your cash conversion cycle sucks, you have like this extreme gravity to your business where you can't grow too fast. Otherwise, you'll literally like implode because you'll run out of cash. The second thing I learned was that what moves the needle in retail isn't always as data driven as it is in DTC. What I mean by that is humans are irrational and buyers are irrational, right? So like sometimes the reason why you went out in a shelf space is because of FOMO or because you told a better story to the buyer. And Mike and I actually got on this call I think it was a few months ago or like a month ago, right, Mike? And this was before our Target launch where he talked about.
Ironically, I was in Salt Lake City in the airport on that call because I just flew into that airport and I was like, and it brought back that memory. So yeah, just recently in the same place.
There you go. And he made it like very clear, hey, like you don't want to give them everything they want. You want to make them like feel like they want more. They can't get enough of it, right? Like you're out of stock, and there has to be a real push and pull to the relationship. With DTC, like, dude, we just put a product up and it sells. Like there's no like pitching a human being or there's no emotions going on. Like we write good copy, that's it. And the third thing is like you deal with real world problems that just will crush you. Like candy melts, right? And LA had a massive heat wave in September where it got to 110 degrees for like 3-4 days in a row. Guess what happened to all of our candy? right? That was in transit because we didn't plan ahead with refrigerated trucks. So it's like a lot more real world problem oriented is what I would say, because DTC, you're shipping from a 3PL or a warehouse and you're shipping directly to the consumer. With retail, no, it's like it's going through a truck to a DC, then to a shelf. So your product is going to be exposed to a lot of different environments. And even on shelves, like some of our candy's getting crushed. We didn't expect little kids to come in and just like actually squish the gummy worms for fun. Like, who could have expected that? Well, that's happening. So those are the three things that I found the hardest to adjust to, and that I like cost me sleep at night currently.
Yeah, it's so interesting because you went from literally a dangerous weapon to a delicious treat, and there's probably not a bigger 180 anybody can do. Uh, and you also went from being the largest sword seller to the smallest candy vendor in Target. Even if you're growing fast, by just the virtue of being the new guy in Target, you're the smallest one. Like you're lucky to be there, right? Like it's fucking Target or it's Walmart or it's whoever. So it is not only is it the most different thing to sell, it is a total you know, big fish, small pond to small fish, giant fucking ocean that you're swimming in right now. And then you have to just think about like the real world. Like, yeah, dude, it does not matter if a wallet gets delivered on Venus, it's not gonna fucking melt, right? But your candy getting crushed in stores, yeah, like there's a reason why chips have air. Like now I have to start looking at like air packaging for your candy, right? So there's a lot of different things you have to start thinking about. Are you happier now than you were selling swords?
Dude, I so we have an amazing team, and it's like it's kind of infuriating not to be growing fast. Because like imagine you like hire you get all the best athletes on a team, like LeBron James, Magic Johnson, like everyone on a single team, and like you just keep losing. That's what it felt like. But with Candy, like every little weird marketing stunt we do has like a huge effect. I think the other thing I learned is like I never want to be the biggest guy in a space ever again. Like I want to have like real market share to eat always.
Yeah, dude. And also you want to have an enemy. You want to have somebody you can actually like rally your team against. Because like with Mr. Beast and Feastables versus Hershey's, like or like with Lunchly and Lunchables, like they have a true enemy, a giant they can go after. And with candy, pick fucking anybody. It could be Nestle, it could be Hershey's, it could be Mars. You could be like, we're taking market share away from them and they're bad, right? And your team can rally around that. What's up, everybody? Welcome to the Operator's Northbeam ad unit. So 30 seconds, I'm going to tell you all about how if you have any problems with Northbeam, you can directly message Austin, the CEO. He is there. He will set up your ad account. He will make your bet. He'll give you cookies. Really, they have a dedicated team of people, probably 30, 40, 50 reps at this point, who will make sure Northbeam is working correctly and functioning so you can get amazing data out of this ecosystem. They will be more hands-on than any meta rep will ever be, and they're going to help you understand where your ad dollars are best spent, best positioned, and which ads are working. My team works with the Northbeam team literally every day. They're in my Slack. Maybe you don't get the same level of support as an operator, but they will be there to make sure it's working. And if you're not happy at all, just email Austin. He will take care of you. We use Northbeam every day. It's a benchmarking tool. It's super helpful for forecasting, daily pacing, inter-hour pacing. So we can see like if we just launched an ad in 2 hours, if it's working or not. That's what Northbeam does for us. So thank you, Northbeam, for the support. I'm customer probably number one. So thank you so much.
Well, one thing to add regarding Northbeam, because we just went through a contract renewal with them on their specifically on the MMM, and we got a pretty sweetheart deal. And I expect them to come back to us and raise our price, and they kind of deserve it. I was like, let me reach out to the team, and see how it's going, right? Because I'm not in the day to day. I get feedback. And the team was like, they have improved the MMM so much since we started it that they were like, we should definitely pay for this increase. So, and my team hates every agency and most SaaS. The only person that hates SaaS, the only more than my team is Sean Frank. But yeah, I mean, they came to us. They're like, hey, you guys got the sweetheart deal. We were one of the first MMM clients. And I was very, very pleased when my team was like, it's really working well for us. So that's my little MMM plug.
Jason, who's your enemy?
Who's our enemy? Well, when people talk about our competition, I think people often refer to Allclad because they've been around the longest and are known for quality. So to me, I don't want to call them an enemy. I call who do we aspire to be in the conversation with? Um, there are a bunch of other D2C brands that act like we're their enemy. And maybe at some point we did think about them as our competition, but I think we have run past them. And so maybe on the margins, there's something there. We could but we can still take inspiration from them and the moves that they're making. You know, they're all operators. They do good things and bad things. But I would say more the big guy. The problem with us now, and the conversation with you, I think, is very good for most of the listeners of the Operators Pod. But for us, we need to look at the bigger guys to think about how do we level up, because and then we want to be in a position where there aren't that many to actually look at. That's actually a different problem. So you had the problem of just owning a market and having it be limited size. That's a different problem than being it's similar though in some respects of being so big that you have to look outside where you are because the comps in the space aren't good for us.
Yeah, Mike has a story where he was talking to either Walmart or Target, and they were talking about bringing Stanley in, and Stanley didn't want to give them certain units, and they were like, "Okay, well, if you won't give us these units, we'll bring in Simple Modern." And Stanley was like, "Oh, great, yeah, you should bring them in. Like, we love Simple Modern. Yeah, that'd be a great fit for you guys." And if you're Mike, you're like, "Fuck yes, right?" Because you're getting free shelf space from them. And because Stanley doesn't see you as a threat, Stanley's going after who the fuck knows. Like they're trying to compete with Coach. They're trying to compete with Chanel handbags or whatever. But Mike's definitely trying to compete with Stanley, right? He's trying to move up that curve. So, Mike, am I telling your story right?
Well, I think that in our industry there's such fluidity that you can't get too fixated on just one competitor because you blink and it might be somebody else, right? Like if it was 3 years ago, it'd be like Yeti, everybody's chasing Yeti. And, today it might be Stanley or Awala or whatever. And so I have two takes here. One is having strong competitors is really good. You mentioned it, but like you want to have a pace card. You want to have other smart people doing smart things because you can use their ideas. And so in general, if you have a lot of smart companies in a space, the category just grows faster because there's just more quality ideas that get put out there. But you don't want to get too fixated on one particular one. I don't know if you guys have been around to feel this, around long enough in your industries where you've seen this cycle, but I've definitely seen it in mine. Where like you'll have somebody and you'll be like I won't name the brand, but there was a brand that was just crushing it in 2019. They're one of the kind of OGs in our space, and very aspirationally looked at them and like we would love to build a brand that's kind of that level. And they've been in massive free fall the last 2 or 3 years. And I can tell you when you kind of set somebody up like that as an aspirational person to chase and then they fall off, it is not nearly as satisfying as you'd think it is. It's kind of like it has a weird impact on my psyche. And so I actually think the healthiest way is that you have several different people you're looking at where you're like, I think they do X or Y better than us. I'm happy to borrow ideas and inspiration from them. I'm happy to challenge myself and my team with what they're doing. But I'm not going to get too fixated on one person because if it's all like a, hey, Carthage must be burned, well, what happens when Carthage is gone, So, and I'm just a big believer that categories where there's a lot of good competitors end up being the best categories to be in.
Yeah, that's Jason's answer with Allclad. He's like, no, yeah, like we got some competitors, but I like Allclad and what they do, and they make quality products, and we're going to be there. Isaac, let's talk more about this cash conversion cycle. So, as you know, I'm the first investor in Camp High Foods. I think Mike joined me in the second round. How much money have you raised? And are you going to raise more? I tell people they can't invest. I'm trying to keep all those shares to myself, but tell me about the actual capital needs of scaling up a business like this.
Yeah, we Actually, before that, I just want to say Hershey's and Mars both announced their own freeze dried like SKUs, and I couldn't be more excited about it because this whole year I've been telling people about this category, and everyone's like, "It's a fad." That's actually the number one reason people haven't invested. When I was out actually doing angel rounds, like, "Oh, this is a fad," and I'm like, "Ha!" Mars just did it. They don't invest in fads. Um, so we've raised a little over $1 million total. And that almost all went into our own manufacturing operation. You're buying real world assets, right? Physical freeze dryers, uh, kitchen supplies, all that good stuff. Um, and it was very important to me that we set up our own manufacturing from the start because it's a new category. So there's going to be a lot of experimentation. Nobody knows what the playbook is or how the rules are going to be written. So it's important that we had control over that. Now we're actually moving to a co-manufacturer for a large part of our capacity. Um, but I think we've actually raised very little money for a CPG brand to the stage we're at right now. I've talked to a lot of CPG founders who raise a lot more, and that's when like they get into Target with that money. Basically, I think the way we've been so lean is like I just have a 13-week cash flow cycle sheet. Like you'd be surprised who doesn't have that. But I guess on the cash conversion cycle, the worst part about it is like you don't even know when some of the retailers are going to pay, especially if you do a lot of specialty. So like I'm not going to name names, but if you're not in a premier retailer like Target, there's a lot of smaller accounts that we have one of them on our book on our collectibles right now, and they're just like, we don't know when we'll pay you. We'll pay you, but we don't know when. They're 60 days overdue.
And they might not ever pay you, Isaac. Like if you were in Bed Bath and Beyond, you just didn't get paid. And this is something that people in the kind of e-com world take for granted because Amazon pays on 7 days and Shopify nobody's like, am I going to get my money from Shopify for the last week? That's never a thought in anybody's head, but it can go that way with retailers.
No, it's made us consider who we launch into now.
Mike, that is a very good point. We complain about PayPal holds being like, oh, they hold my money for 28 days. That is super fucking annoying. Trust me. I've had probably 2 years ago, they probably held 4 million of my dollars, like a ton of money for 28 days, 36 days, whatever. Like it took forever. I know Poopery. They were in Bed Bath and Beyond when they went bankrupt. They had over $1 million in outstanding accounts payable that just they didn't get. Could you imagine taking $1 million punch in the face just from one retailer, right? And like the Container Store looks like they're gonna go fucking bankrupt. So yeah,
Dude,
you
we were
have
about to launch into Big Lots, and then like I kid you not, like the truck was on the way for us to load into, and I saw a tweet about them going bankrupt that same day. Like, the real like it's wild how like you can just get screwed on retailers not paying you.
This is why they get bigger. I mean, you see the same thing in banking, right? Like you see a Silicon Valley bank or a regional bank that goes under, and everybody's like, I should just have all my money at freaking Morgan. Like I shouldn't be messing around with this. It's the same thing with retailers. The few retailers that have really reliable balance sheets, the Walmarts and Targets and Costco's of the world, there's a reason why they trade at premium valuations as public companies. There's a reason why everybody wants to be in there. Not only do they bring the volume, where like one Target account can be 20 mid-sized retailers, but also you don't have to worry about getting paid. And this is kind of something worth saying if you're not familiar with mass retail, that I think has been counterintuitive to me how true it is. On both the retailer side and on the brand side, they're constantly looking to consolidate. So it's been really surprising in a good way to me that like a partner like Walmart, I'll use them because they've been a great partner for us. They're constantly like, how do we buy more stuff from you? Once we find a vendor we like, we just want to buy as much as we can from them, because we would much rather, if you think about it, if they need to fill their store, they'd much rather do it with 500 vendors that they know are great to work with than 5,000 vendors. And so you see that on the retailer side, but then also on the brand side because of exactly what we're talking about, that you want to work with the few people that you know are going to be here for sure 2 years, 10 years from now.
Yeah, it's super interesting where we are in Target. There's like 10 other freeze-dried SKUs besides ours. And it's really obvious what they're doing. Like they're testing everyone, right? So I think we're in the pre-stage of consolidation. So I'm excited to crush all of them. And
Yeah, all right. If you listen to the Operators podcast, go to your local Target, buy some fucking candy, guys. I think we're up to 10, 20, 30,000 listeners. I have no idea how many people listen to this podcast, but go to your Target, get yourself some tasty candy. All right. You guys have any questions for Isaac?
Isaac, we're here for you, buddy. Thanks for coming on. So stoked for your success. Not surprised, but very pleased for you.
Isaac, I think it's awesome what you're doing, man. And I think there's an episode that we haven't done yet, but just when you're entering into a category that's growing and it is kind of in the pioneering phase, I think there's a skill set that helps make you successful. And that's what I've seen every time we've talked. Like you've got it, and that's why you're being successful. And so, anyway, we're rooting for you. Obviously, multiple of us are investors in this because we believe in you so much. But it is cool to see what you're doing in a totally new category.
Let me just add one thing to wrap up, Isaac. It all goes back to having a great product, right? Seeing a great market opportunity with the right product. We talk about this all the time. It all starts with product. All the incredible marketing in the world you're not going to market yourself out of a bad product. And as Isaac has proven, you're not going to market yourself out of a bad market, i.e. swords. Even though he had a nice business, made nice money, there was a cap. So right product. It starts with a great product. You got to have the right market, and then that's the real raw material with good unit economics to build a successful business. I'm super stoked I'm hoping that you guys make me feel terrible in a couple of years for not putting money into this thing.
Jason, just put some money in. You got fucking your splashy cashy, my guy.
I have rules and regulations regarding my investments, boys.
That sounds like his wife didn't approve it.
Guys, he just made $600 in a golf tournament. He has got $600 that could go in right now.
He just won the senior citizen golf tournament. Isaac, before I let you go, I'm going to glaze you up a little bit because people like to talk about organic. People like to talk about short form video. People like to talk about the fads of being early to a market. That you could have all of those things, but you could lack tenacity and you could not get anything fucking done. How many people have we seen talk about TikTok shops or short form video and then they don't get to 8 figures or they don't launch a second brand or they don't do anything? Isaac, I've been to his factory a couple times, built a goddamn candy factory in an insane asylum in downtown LA. It is, dude, the ceilings are like 5'8". I'm walking in there, I'm scraping my fucking head, dude. And that's just tenacity, right? To go to China and start selling swords, to be the biggest sword seller, to be banned from Meta and keep going, to take out your credit cards. We're talking 2021. This guy's 3 years into his journey, right? In 2021, I was running $100 million a year fucking wallet company, right? He is so recent to this and he continues to work harder than all of us and continue to have more success. So this is a rocket ship of a human. It's not the business, it's not the opportunity. I think those are really, really cool. I remember having a conversation the first time I met Isaac. We were at ECF, shout out ECF, and we fought on the internet before that where he was telling me about how TikTok's great. And I was like, no, dude, YouTube's great. And we had a whole argument in person about it as well. And since that moment, this guy has just been thinking about YouTube, thinking about short form, and finding ways to make money off of it. And look, I'm there as an ally. I'm there as an investor. I'm there as an advocate. So, Isaac, you are an awesome fucking dude, and you keep crushing it.
I want to say one more thing here because I think it's big, which is that there are a lot of people listening to this show that have the kind of drive and want to. I mean, because that's what we're talking about. Isaac, you've got the drive and want to. And the thing that I think is actually you can take from your story and apply to your life if you're listening to this is that there's a lot of people that have drive that want to, but are stuck in a situation that has low potential for whatever reason. You're in the wrong market or whatever. And I've always said this, but I think the most dangerous place a very talented person can find themselves is in a business that's just successful enough that they don't want to quit it. And I actually think what was significant, Isaac, is that you were willing to kind of walk away from something that had a level of success, but could never be the big thing. And then you very intentionally picked something that leveraged your strengths. And maybe that would be the advice I'd give everybody listening to this is like, if you can, if you can be willing to quit the okay thing to pursue the great thing and be intentional and be strategic with it, that's when you can get the really big outcomes.
Okay, yeah, I agree completely, Mike. And a lot of people ask me for my opinion on stuff, and I'll tell them my honest opinion. I'll be like, what you're doing is bad and you should stop. And a lot of people get mad and they're like, no, I'm going to keep doing it. Isaac was like, you're right. I shouldn't sell swords. And then he's like, I'm going to figure something else out. And that was the best fucking thing he could have did. So of course I'm going to support that. Isaac, thank you for being here. Thank you for telling your story. People are going to want more of you. So next week we'll get more Isaac on the podcast. We'll give more than 30 minutes. Thank you, dude. Talk to you later.
Peace out. All right. Bye.
See you, Isaac.
Postscript is the only SMS solution you should be using as a brand store owner because their sole focus is on SMS. They're the biggest innovators in the space, and their latest launch of Postscript AI is proof of this. I got to see the demo a couple months back and immediately wanted in on the beta. And over the course of a 4-week period, Postscript generated, for Ridge, over $124,000 in AI-driven revenue. We used a holdout, so I can confidently say $12,000 of that is purely incremental. A 9% lift in browse abandonment, 14% on checkout, and our best performing abandoned cart flow had a 29% lift on click-through rate and a 21% lift on earnings per message. Should I say that again, but maybe a little slower? $12,000 in incremental revenue, a 9% lift on our browse abandonment, 14% lift on our checkout abandonment, and a 21% lift on our abandoned cart automation. And the work from our team was close to zero to generate these numbers. There's two things about Postscript AI that I'm personally really excited about. One is Brand Center. It's the central nucleus of all of their AI message testing. We get to feed them exactly how we want to sound, what words to say, avoid, who we want our personas to be, and tune that over time to make sure our AI-generated messaging is on brand as much as possible. I think Brand Center will power messaging everywhere potentially. Right now, we've just got it in our SMS flows, but I think it could go a lot more places. The second one is now that you've got this Brand Center, you can do infinity testing. So you can imagine maybe once, twice, 3 times a quarter, we're setting up an A/B test to understand, is this message better than this one? Infinity testing does that in the background constantly, testing hundreds and thousands of variations to identify the optimal messaging given each flow. When I first heard this described, it immediately made me think that A/B testing feels very archaic. So I'm incredibly excited about both Brand Center and Infinity testing. So if you're in D2C marketing, you need to check this out. They've completely transformed how the team at Ridge is approaching SMS. Go to postscript.io/AI to learn more.
So I had a good meeting with a big global investment bank coming in, just sort of doing their dog and pony, talking to their equity capital markets people. You get to our size and scale and people start to care about you. Not that many, but a few. And they sort of went over a little bit of the state of the consumer, which is something that I'm very interested in, particularly looking at how our business is performing this year. Um, it's always nice to get a little reality check from people. Um, I think everyone cares about the state of the consumer. Certainly we do, our listeners do. It's interesting because we had very high expectations for this year and we're doing really well, but it's all relative. And so uh, I've been really curious as to what people are saying regarding the consumer. And so their state of the consumer is that it's stabilized. There's relative stabilization despite higher costs out there for the consumer, and they are feeling like at the premium level of consumer that things are pretty solid, but that wage growth has been slowing. So the lowest quartile is declining the fastest, and consumers are borrowing less these days. Maybe it's to shore up their personal balance sheet, but it's really just rates, and the positive wage gains out there at the lower level have not been enough to offset the cost of living. Excess savings is diminishing, and consumers are generally financially stretched and are prioritizing essentials over discretionary purchases. And so I'm sort of thinking about how does that relate to us? How does that relate to other brands that we're friends with? And the bottom line is price remains the biggest factor for consumers in many areas of discretionary and leisure spend. That's what they're talking about. So, I mean, the takeaways are, if you're growing 20+%, um, those are pretty dang good numbers, especially at scale. Like anything with a two in front of it at scale right now is kind of borderline best in class. So that was really interesting.
Yeah, we should clarify at scale for our listeners is 50 million or above. Really, Jason's talking about 100 million or above, but it's really easy to be growing 100% when you're doing $5 million, right? Jason's really talking. He's in the room with bankers that are trying to do pre-IPO deals, so they really want to see 20% growth on a $300 million a year business. But if you can get 20% growth on a $50 million a year business right now, you're still doing pretty good.
Yeah, and it's the Q4 is going to be interesting, but credit card debt is at 40-year highs plus higher interest rates. Consumer wallet share appears balanced between goods and services, which is actually an interesting thing because it was kind of shifting towards services in like the last 12 months. So you're seeing a little balancing out there, but um, I think high ticket items that are not focused on the premium market are, that's where things are going to be difficult. Our business, we sell a premium product, but we definitely have a very broad audience. Not everyone can afford to buy an relatively expensive frying pan or a set. And so I think we're feeling a little bit of pain in that the premium buyer is always going to be there, but this below that level, I would say there might have been people who could figure out a way to get it done because they really wanted it, and I think it's more challenging for those people. Sean, you've been seeing some really solid numbers on your business, some of it due to different due to product diversification, but how did those data points square with what you're seeing?
Yeah, dude. I mean, our Q2 sucked. It was the lowest growth year over year we've ever had in a quarter. And it really made us look at our business, right? Because we have so much cool shit going on, right? We have new wallet types, we have rings, we have travel. I'm like, all the signs point to that we should be growing like crazy. So we made the conscious effort in Q3 to just discount more aggressively, more often. And what that has led to is a huge increase in sales. Our Q3 was our biggest non Q4 quarter ever. So I know there's a lot of stipulation there, but obviously Q4 is our biggest quarter. Q3 did not beat a Q4, but it was our second biggest quarter we've ever seen, basically in company history, and that is because we are just more open to discounting, more SKUs, because the consumer's feeling pinched. Like you said, 25% of people, the top quartile, are just doing totally fucking fine, right? They're always going to be fine. They're people with a ton of disposable income, people who are just rich. And the bottom 25% are probably suffering the most, but that bottom, like the middle 50, those are the people who make or break a year, right? And so if they're feeling a little bit of pain, you just have to discount a little bit deeper to win more of those people over. And
Well, it's interesting. I think we talked about this on a previous pod recently about the offer, right? Having the right. Maybe we talked about this at Sendlane actually, which you were under the weather, Sean. But um, it's really about what is the offer that's going to get people to convert, and sometimes it's just what is the deal, right? What's the deal that you're pushing, and um, the question I have for you really is if you look at the two levers, I like to simplify things, and the levers are, the price of your product, which and your COGS, which gets you to gross margin, and then your marketing spend, right? And it's like you could ramp marketing spend and keep prices the same. You could lower prices, and that might have an effect on marketing spend. So what you're doing is you're discounting and it's driving top line sales. But is anything happening at the marketing level as well? Like, what's the effect? Because you have to kind of look at both of those to make good decisions.
yeah, our MER went up year over year in Q3. So we discounted more. And because of that, our MER was more effective. Now, I'm not really worried about gross margin in my business, and you might be gasping at the screen right now, being like, Sean, an operator doesn't care about gross margins. It's because year over year, we've improved gross margin so much in our wallet business, and the wallet business is 90% gross margins, right? Like it's $5 to deliver to somebody. They're pretty cheap to make. We have pretty good margins built into this business. So if I go from 90 points to 85 points, it's marginally not different at all for my company. So the biggest input is marketing spend. And because of that, I run marketing spend really low to the ground. Like a good MER for me is like a 2.7, right? Uh, so we're really focused on like winning over incremental buyers. All that being said, you should think about your offer and different types of offers you can do. I've been telling you guys to do customization forever, and that because like free customization is an offer you can do that isn't discount focused, right? You guys have your discount focused offers on lock, and you're going to run those 8 to 12 times a year. You know exactly what you're going to do. You have your bundles, you have your best offers, you have your Black Friday. But what are you going to do in March, right? And that's when it's like you have gift with purchase. You guys give free aprons. That'd be fantastic. Personalization on the aprons or on the pan itself, I think would be awesome. And then just finding more unique offers, right? That's what collabs are, limited edition drops. We just did a Linus Tech Tips wallet, totally crushed it. We did the MKBHD wallet, totally crushed it. We have more influencer wallets coming out because those are like collectible type things. So it's finding more offers to drive MER. But going back to what the data shows, yeah, the average consumer is more stretched than they've been since COVID, right? So the economy's fine. The economy's growing. There's pockets of depression or recession, right? I think the real estate sector is still totally fucked. And there's going to be a lot of real estate agents who are going to become bartenders because there's just not enough deals getting done. That happened in 2008. I think it's happening right now. And like because of that, furniture kind of fucking sucks right now. If you're not moving, you're not buying furniture, right? That might affect home furnishings a little bit too. E-commerce was in a recession, tech's in a recession right now, but other parts of the economy are pretty good. But the consumer is still just stretched a little thin. You should be ready to discount more aggressively. And we've done it in Q3, had a great fucking quarter.
It's interesting you talked about furniture and stuff like that. So the guys who I was just talking to, they sort of broke stuff down into a few different buckets. It's good. It's interesting way of looking at the market. So there's high growth consumer lifestyle, um, like On Running, Lululemon, Yeti, Elf Beauty. Then there's branded consumer durables like Breville. There's enthusiast brands like Figs, and some cycling and stuff like that. And then there's some traditional home goods sectors and things like that, and you can see like the multiples just go this way as I walk down that list. Like high growth consumer was peaked at like 27 times earnings and is now at like 19. Branded consumer durables is around 18 times. Some of these enthusiast brands are like 12 times. And then just like the traditional ones are like 10 times, trade at 10 times EPS. So that's a referendum on those markets, basically, right? That's the market is pricing those earnings higher or lower for a reason.
Totally, man. And we will start. I mean, look, this is not a stock market podcast, but my guess is that AI will continue to be hot for 6, 8, 12 months, but eventually people take their chips off the table and they put it into new categories. And that's when you see like if SaaS companies are trading at all-time low, revenue multiples, that looks like a good deal. Some other company doesn't look like a good deal. You start balancing your portfolio, and that's when consumer could actually have like a big bounce again, right? You could get a On Running back to 30x earnings or 40x earnings. I think Lululemon peaked at 52x earnings, which is something fucking crazy. So
It's interesting that we're talking about Lulu versus On Running, and it's funny how for some reason On Running is like the favorite shoe of Wall Street, and so it's funny. It's interesting with retail brands how that what that effect is, like how people think about it. We were talking there's a couple of on the financing side that I think is interesting. We had a few conversations, and I had actually a really interesting conversation recently. So I met a VC, a brand new VC fund that wants to invest in consumer, which was shocking to me. Like I haven't seen that in a while. And so they are out there, and these guys are actually asking me for deal flow. So maybe we'll talk about them on another podcast if people think that's interesting. The other thing on the financing side that we were talking about is that there really are only like 5 or 6 large PE firms that are even investing in consumer right now. Like that's how bad that's how bad the financial markets have been. Like there's like this whipsaw effect from all these bad IPOs, all the beating that investors have taken in 2021, took in 2021 and 2022. Well, the beating that they've taken from the 2021 IPOs, that is. And so there's only 5 or 6 large PE firms that are really even investing in consumer right now. It's amazing. And Sean, I know you like to keep tabs with what's going on with investors and stuff like that. What are you seeing?
Well, as soon as there was word of rate cuts, as soon as they was pretty locked in, I got a bunch of emails from private equity groups trying to get dinner. So, and I took them. I mean, there's a couple. There's a couple bankers I really like, and there's a couple of PE firms I really like as people. They do really fantastic deals. So we hung out. I haven't seen them in like probably a year, maybe a year and a half. And I'm like, yeah, how you been? What you been doing? They're like, nothing. I'm like, what? I'm like, what do you mean nothing? They're like, yeah, the industry's been shut down for 18 months. And they're eager to get back to work. I mean, if you are a consumer banker, you do consumer deals. It's really hard to like, maybe you might do some consumer software, maybe you might do some restaurant deals, maybe you might do some real estate deals, but like your bread and butter is consumer, you want to get back to consumer. And it's been very, very difficult to do any consumer deals the past 18 months. So they are ready, interest rates coming down, strategic sniffing around. But Jason, like you said, it's actually, I've been very hopeful that 2025 is like, like people can start doing deals again. My COO Andres, he's a Harvard MBA. He's a banker, before coming into the e-commerce world. He thinks the earliest is 2026. You're right. It's probably like a longer than I think, just because there's a lot of shit that has to work through the system. People have to be excited about it again, and there's just not a lot of hype. But if you're ever going to be a consumer VC, now is the time to do it, because
right. And these guys, they're called Cutting Horse Venture Capital, and they're former operators, most of them at least. They've built and sold a couple really, really good businesses. So I was very pleased to hear that they're out there. I don't even know if they have a website yet, but I talked to their guys. They're really, really good people, very smart.
Dude, introduce him to Isaac. The guy just raised $1 million. He's going to need to raise more.
Yeah, baby. Well,
but look, I mean, if you don't need to do a deal, don't. Like I've been very public that at some point I want to sell Ridge and I want to get close to $1 billion for it, because I own north of 20%. I want to get a ton of money. I want to go do my next thing, but I'm not going to take a song for it. Like, what I mean? Like I'm going to wait to hold out. I don't need to sell it. We're profitable, never raise any money, no debt. If the worst thing is I get to run and be my own boss for another 2 years, boo-hoo. It's fucking a great life.
Yeah, you build a business you want to own, that you could own forever if you had to.
Totally. And I'm excited. We're doing a lot of cool stuff. But
I love
Jason,
it. I love it.
Thank you for bringing some awesome data, the state of the consumer. My tip for Q4, just plan on discounting harder. And if you don't see good sales, probably drop your discount 5 additional points. And then Jason, next year, look at customization, look at gift with purchase, find new ways to get those offers in people's hands. Thank you for listening to the Operators Podcast. Please go to Target and buy candy for Isaac's brand so they stay in Target. Thank you so much. Talk to you guys later.
Later.
You made it. An amazing episode of the Operators Podcast. Thank you for being here. Thank you for listening. Thank you for subscribing to the newsletter. Thank you to fulfill the best sponsor on earth, Northbeam, Postscript. They're tied for 2 of the best sponsors on earth. Love them, love what they do for us. Thank you for being here. Subscribe, like, share, follow me on Twitter, follow the other guys on Twitter. Talk to you later. Goodbye.